Hello everyone, welcome to Thursday. And this week it's great. I've had a viewer make a suggestion of a couple of funds that they're actually investing in for me to do a review on. So the first one that we're going to take a look at is the Morgan Stanley Emerging Market Domestic Debt Fund. And then we're also going to take a look at Western Asset Emerging Markets Debt Fund. They're both very, very similar in the way they invest, but they are two different fund providers. Now, before I jump across and share my screen, just remember that this is definitely for educational purposes only. No way is it intended to be personalised financial advice. If you're looking for that, then you do need to go and have a chat to your own financial advisor. Shall we take a look? So what I've done here is, first of all, I've gone into Morgan Stanley, and they are the ones providing this fund. So it's the Emerging Markets Domestic Debt Fund, and there's the ticker code EDD. And if we scroll down, you can see that it's got 405 million of funds under management. And you can see here that they are seeking a high level of income with a secondary objective of long-term capital appreciation of the fund by investing into a range of sovereign, quasi-sovereign and corporate debt securities in emerging markets. And they're mostly denominated in either emerging market or non-US currency. So it doesn't have really any exposure to the US. And if we scroll down, you can see here are the fund facts. So it started back in 2007. You can see, like I say, the funds under management, the expense ratios, that sort of thing, and the management fee. Looks like they pay a dividend every quarter. And then you can also find out some of the yields that it's currently returning. So 10% is a very good yield. You can scroll down further and you can see the price and performance of the fund. So this is where you can go to actually do your own research. And if I keep scrolling down, we've got distributions, and if I click the tab on the top, it will take me to the composition. So you can see here, this is where the fund is made up. So heavily into sovereign debt, a little bit less into corporate, and then just very, very small exposures into like quasi-sovereign debt, FX and derivatives. And this is where the fund actually has its asset allocation. So the most of it here is made up into other. That has about 35% exposure to it. You've got a reasonable amount to China, so that's about 14%. Egypt is their highest at just over 16. And you can, if you hold on the pie chart there, it will actually tell you exactly where their money is allocated. Again, do your own research, and then it gives you the percentage of how much of the fund is exposed to each of these different countries. So it's a really interesting fund. If you go down here, we have portfolio managers, and of course you can download the prospectus and any reports that you would like to have a look at. So let's take a look at how it has been going. So here we've got it up here on the screen, and even though we've got two candles in a row there, that last one, if I just zoom in, that was for Friday's trading, whereas the candle before is actually for the entire week. And this to me is looking like a really good, healthy chart. If I go back out, you can see that, yes, we had the dip way back here back in 2022, which was COVID. It rallied again like all in markets did. We had a bit more of a dip. But basically, since July last year, we've been on a very strong run in this particular investment, which is really good. Let's take a look at the 1 year chart and just see how that's going. And that's really a lovely chart to be looking at. Like I say, you go back here, July 2025 is where it hit its bottom. And since then, it's been having a fairly consistent sort of run. It had a bit of a sell-off through this period here, which was the middle of September, but then it's carried on again. This is really good. Let's put our moving averages on and just see what that's telling us. So we'll pop on our 30, and in this case, we're looking at daily exponential. Here we go. That indices is trading well above that 30-day. Let's also put on our 15 and see what that's looking like. And yeah, on a daily basis, this is looking really, really good. It's certainly a share I would be interested in owning. Let's go into the 5 year and see what that is also saying. And you can see that those moving averages crossed to the upside at around April, end of April last year. And then since then, they've been going on a really, really strong run. If I look down the bottom on this weekly basis as well, you've got some really good strong volume bars here. They're very positive, very strong, which is great. Occasionally we do get the odd red one, which most of the time they're a bit less. Every now and again, if I look at this one here, that was quite a big sell-off week, and that was July last year. But other than that, it's been going extremely well. Right, what I'm going to do is I'm actually going to put on the ATR trailing stops. I use the ATR, so the average true range over a 21 period. Depending on the market I'm in, so in the New Zealand market, I use that multiplier by 4, but perhaps a market like this, I would use 3. So what that's saying is it's going to take the ATR times it by 3. So the moving averages crossed to the upside at around sort of that April figure last year. Now, depending on when you entered this market, these blue dotted lines where I would have my trailing stops. So as you can see through this period here, which was the week beginning 14th of April through to around the end of June, you can see you would have had about 3 or 4 jump ups with your trailing stop. Then it sort of plateaued before it started going again. Now, the only little caveat I've got here is if I'd used a 3 times the ATR, it could potentially have got hit out this particular week here, which was October 2025. So maybe if you'd had a 4 ATR, it would have kept you in the market. But looking at that, this is where my stops now would be. So based on this figure, my stop would be somewhere around $5.66. So great if you were able to buy earlier. Now, just because this particular share has been in a tremendous run, it doesn't necessarily mean that you've missed the market or missed the boat on this particular one, because trends do tend to keep continuing, if you like. I mean, that has been really, really strong through there. We haven't had a down week since December, middle of December last year. So this has been absolutely phenomenal. But it could be an opportunity to keep buying into it. Watch how much you're investing each time, because in my view, keep investing the same amount each time, because if the market suddenly tips over, you are obviously doubling your exposure and it creates risk. You might want to halve your exposure. So let's say you put in $1,000. First time you might want to put in 500 and then keep halving it as that market keeps going. And especially as you keep moving these stop losses. I have got a system that I use. If anyone is interested, I'm happy to teach that as well. Just let me know. But because it's been having a good run, it still means that there could be further opportunities for it. Something to consider. I never try to pick tops or bottoms with a market. If the trend is running like this one certainly is, then hey, let's try to jump on board and see where it's going to take us. Now, I'll just take those trailing stops off and we will put in the other ticker code. And I do hope I've got this right, which is EMD. And here we are here. Right, so what I've done as well is I've looked it up, and this one is a Franklin Templeton offering, and it's Western Asset Emerging Markets Debt Fund. Very, very similar as to the other domestic debt fund that I was looking at. Now, if I just scroll down, again, you can see the total returns, 23% over 1 year. That's absolutely huge. And an average of just over 6.5% since inception. That is absolutely fantastic. If you scroll down, obviously it will tell you when the fund started, the dividend frequency, in this case it's monthly, it's a fixed income class, and here you can also see where the top sectors are, and it gives you more information as well. It talks about Western Asset Management Team, and if you keep scrolling down, you should be able to find the disclosure statements and things that you would need to take a look at just to make sure that this is an appropriate investment for you. Right, let's actually go back to Yahoo and take a look. So you can see here it is very, very similar in that share chart as to how the other one looked that I had up before, which was the Morgan Stanley variant of it. Let's also go and take a look at the 1 year. Again, this one is reaching new all-time highs, just like the Morgan Stanley. Again, it is looking like an absolutely stellar chart. Let's put on our moving averages, and we will go to 30, exponential, And we'll also put on that 15 period. There we go there. So the moving averages, they obviously crossed on the daily chart way back in September last year. And then through this period here, which was sort of around June-ish, it just sort of went a bit sideways, a little bit messy. Then they crossed again. It got really close on this particular day here, being November the 25th last year, of crossing through, but then again it's carried on running. Let's take a look at over the 5-year chart, because in my view it just gives a lot clearer picture. And yes, you can see here that that moving average crossed end of June last year, and then since then it's been having a really, really strong run. Let's take those off. Now what I'm going to do is I'm just going to also put on the average true range, because I spoke about it before. Here it is here. And like I said, I use a 21 period. You can see here for this particular share on a weekly basis, this is currently saying it's about 0.25. What the ATR is really telling us, the average true range, is giving us an idea as to how much potential movement this share has in any one week. So on average at the moment, it's this very low volatility, could have around 25 cents. Now, I would never want to put my stop at 25 cents because, hey, anytime the market trades, you could be taken out of that. So this is the multiplier that I use. This is the ATR that I use, times that by 3 or 4. Let's go and pop that in and see what it says. Like that trailing stops, it's at 21. Leave that at 3. There you go. With this particular one, having it as a multiplier of 3, this is where your trailing stop would be. So currently, you'd have your trailing stop at around $10.53. So what it's doing is it's taking that 0.25, timesing that by 3, and then deducting that from where the share price currently is. This is a fantastic share. Definitely, I'd certainly be happy to hold that myself. Let's take these trailing stops off. Now, because we've got two very similar investment vehicles, if you are thinking, oh, I want to do one as opposed to the other, this is where you can do a comparison. So click on that comparison and you can type in the ticker code being EDD. Here we go. And if I click that, you can see here it's brought up that blue line. So at the moment, and this is over a 5-year chart, because both markets had that huge sell-off back in 2021, over a 5-year period, the Morgan Stanley is outperforming the Western asset emerging market, or the Templeton one. So if you're wanting to see which one's outperforming the other, that's the sort of thing that you can do. And you can do that for any share. If you're perhaps looking at 2 shares that are in a utility sector or something like that, you can see which one has actually been the stronger performer. So obviously, depending on where you got in, it would depend on how either of those funds would be performing for you. And you can see that this is why I use trailing stops, because both of these are over a 5-year period. The Morgan Stanley one over 5 years is down about minus 0.16, whereas the Templeton one is down just under 17.5%. So that's a long time to have recovery. So that's why I stress about using those trailing stops. So yes, there's been an absolutely phenomenal run over sort of the last 12 months, but the thing is, you would not have made back your money if you hadn't have sold out. And for me, that's why I use trailing stops to get me out of a market. So I really hope that's helped. It was a little bit higher level today, but definitely sing out. I love it when you send me ticker codes that you'd like me to do a review on, and those two are 2 excellent examples. And do let me know if there is something else you'd like me to review. And just a reminder as well, for the month of February, I am offering for free my monthly money map. And that is where it's an interactive spreadsheet. You can put in what you're spending as you spend money, and it will bring up on a pie chart as to where your money is actually going. So great if you're thinking, hey, I want to get in control of my money this year and I want to have a little bit to be able to perhaps start to invest into the share market and learn to trade. And this will identify perhaps any leaks that you may have within your own money. I'd love for you to take a look, download it, use it as you please, share it with friends. I've got the link for that below. And like I say, it is free for the month of February. So, hey, have a great week, everyone, and take care, and we will see you next week.